Quite often, people come to us and ask us to make a business case for doing a captive insurance company. In this video, I'm going to go through the business case that we would create in order to do a captive. Let's start off. There are numerous advantages for a client setting up a captive insurance company. First and foremost, with any discussion about a captive insurance company, it needs to begin with risk financing. A captive insurance company is nothing more than a formalized way for a business to finance the risk that they have in their own business. It's a great tool for risk financing, especially if the coverage that the business owner is wanting to purchase is either way too expensive or is completely unavailable. We're coming out of the pandemic where insurance premiums are continuing to increase and insurance companies are cutting the coverages that they're offering. So when you look at captives, 90% of Fortune 500 companies have them, and they do it because it's a way to reduce the total cost of risk that they have in their business. If a business owner creates their own captive insurance company to finance their risk, to reduce the total cost of the risk that they have, a captive is also a great vehicle for them to invest that excess capital that they have. So instead of leaving it in their business and having to keep it liquid or have limited investment choices in where they can put the money, a business owner can create a captive, move that risk off the balance sheet of their own business over to the captive insurance company, where then they can finance the risk themselves, but the excess capital and surplus that's sitting inside their captive insurance company, they have a wide range of flexibility and of where they can invest that money. Without harping too much on my last few videos, employee benefits and group medical insurance is one of the largest and fastest growing areas for captive insurance companies. After the Affordable Care Act passed, premiums have been going up and up and up. You can see my partner Jared Beck's other videos that are listed on this page, but the cost for medical insurance continues to increase. You know, it's not a carrier or state specific issue, it's a systemic issue. And by creating your own self-insured plan, you can buy group medical stop loss insurance from your own captive insurance company at a much better price and control the cost of the claims that are being paid out, so you're not held victim to the traditional medical insurance marketplace. I talked about this with the capital and surplus, but a captive insurance company allows the business owner to optimize their investment strategy. Insurance companies pay taxes different than other businesses. It's not the reason for them to create a captive, but an insurance company is only taxed on its investment earnings. So in a captive insurance company, many clients decide that they're going to invest in long-term vehicles where they're going to buy and hold, and it allows them, because of the tax consequences of that insurance company, they optimize their investment strategy, thus minimizing their taxes. That's the general business case for creating a captive. But I went a step further. I went out to our existing clients to poll them to figure out, why do they do their own captive insurance companies? And what you'll see in the next few minutes is a list in ranked order of why our clients have created their own captive insurance companies. At the top of the list, our clients say that they started a captive insurance company because it's a formal vehicle for them to fund the risk that exists in their business that they have every day, day in and day out. So they've already made the decision to not purchase in the traditional market and to self-insure that risk. So as long as they're taking that risk in their business, they might as well formalize it and put that risk off their balance sheet to the balance sheet of another entity, and that's all a captive insurance company is. The second most important reason that our clients created a captive is it gives them the ability to manuscript their own insurance policies. Insurance policies are written primarily by ISO and the Insurance Service Office, and there isn't a lot of variation between them. So if you remember the old days of insurance policies, they may be 10 pages long. Now an insurance contract is 50 pages long, but 40 of those 50 pages are exclusions. So what this does is it allows the clients to create a policy that's going to exactly cover the risk that they have in their own business. The third most important reason that our clients have told me is it gives them access to reinsurance. Reinsurance is insurance for insurance companies. So when you're an insurance company, a captive insurance company or traditional insurance company, you have the ability to access global reinsurance. And that is one reason that our clients have done captive insurance companies. Reinsurance allows a captive insurance company to decide exactly to the dollar how much risk they're willing to take and how much they want to offload to other insurance companies that exist anywhere in the world. A captive insurance company also allows our clients to buy down their retentions. So they may already take $1 million per claim, but they may not want to have that $1 million in their own business. So with a captive insurance company, they can actually have their captive insurance company cover $250,000 to $1 million, thus allowing them to buy down the retention, the amount of risk that individual business takes, and then offload it to another formal insurance company, which is their own insurance company, the captive insurance company. Next on the list is it gives our clients at one place that they can centralize all their insurance. Instead of having, 10, 15, 20 different policies and 5, 10, 15 different brokers, if their portfolio is large enough, they can put all of their risks inside their own insurance company and then go buy bits and pieces of reinsurance all over the world. Thus, they know exactly, which gets to manuscripting their policy, they know exactly what they're covering, what risks they're keeping in their business, what they've offloaded, and what their liability is because they've had access to reinsurance. Next on the list is they have the ability to recognize the tax benefits of having a formalized risk transfer vehicle in the form of their own captive insurance company. Captive insurance companies pay taxes different than other businesses. Now, you'll notice that the tax benefits on the list of our client survey is number 7. It's not number 1, which a lot of captive managers out there will actually go out and sell the tax benefits of a captive. I completely believe that is the wrong way to do it. What the business owner should do is say, I want a captive because it's a better way for me to fund my risk and risk transfer. But there are tax benefits for forming your own insurance company and moving that risk off the balance sheet of the business over to the captive insurance company. And then last but not least, with our clients on the ranking of most important, is it gives them the ability to provide evidence of insurability in the form of certificates of insurance to meet any contractual requirements that they have in their business. A third party may require the business owner to provide them proof of insurance. And instead of going out to the traditional market, their captive insurance company in many situations can provide the proof of insurance to third parties that the risk has been transferred from the business to a bona fide insurance company. Thanks for watching. I hope you enjoyed this business case for captive insurance companies. We just published our 2021 Ultimate Guide to Captive Insurance Companies. If you put down below you'd like a copy of it, that will be a link will be emailed to you where you can download a copy of the ultimate guide to captive insurance companies. My name's Wes Sirk. I'm the Managing Director of Risk Management Advisors, a risk strategies company. Thanks, and stay tuned for the next video.